Hello and welcome to members of the WRAP Super Fund. My name is Catherine Robson and I'm the Chair of Equity Trustees Superannuation Limited, ETSL, the trustee of the fund. On behalf of the trustee board and the senior management team, I'd like to welcome you to the WRAP Super Fund's annual member meeting for the year ended 30 June 2025. I'd first like to acknowledge the traditional owners of the lands on which we meet today and pay respects to elders past, present and emerging. Before we commence the formal part of proceedings, I'd like to run through a few housekeeping items regarding today's online meeting. We've scheduled a question and answer session as the last item on the agenda. We've already received questions from some members and will be answering those during the meeting. If you have other questions, please submit these during the meeting. To do this, click on the live Q&A button located on the right-hand side of your screen and start typing your question. The answers to all questions, along with the minutes of this meeting and the recording, will be available on the fund's website in the coming weeks. However, it's important to note that we cannot answer any questions that relate to your personal circumstances in this meeting due to privacy constraints. In this instance, we encourage you to contact the fund directly. This meeting is being recorded, so if you have any technical issues or you can't stay for the entire meeting, please note that a full recording will be made available to all members within 4 weeks of this meeting on the fund's website. And finally, information provided in this meeting is of a general nature only and does not consider your personal objectives or take into account your financial situation. If you need assistance, you should either contact the fund or seek advice from a licensed financial advisor. You can also refer to the product disclosure statement and your most recent annual member statement for further product-related information. Please contact the fund directly should you need a copy of any of these documents. Today's agenda has the meeting scheduled to run for about 45 minutes. In attendance, we have a quorum of our directors from the trustee board, along with David Warren, the General Manager of Superannuation Services from Equity Trustees, as well as Adam Cusio from Deloitte Australia, the fund's auditor. We're also joined by Steve Davis, Executive General Manager, Business Services from Platform Plus, promoter of the Platform Plus division of the fund. The agenda for the meeting includes my opening remarks, after which you'll hear from Steve, who'll provide an overview of the fund, key achievements, and the focuses and perspectives on the investment market's performance and outlook. David will then cover the trustees' review of the fund, including the findings of the most recent member outcome assessments. The board, auditor, and presenters will then take some member questions and provide answers. So now turning to my chair remarks. Firstly, we'd like to share some important updates on the supervisory and compliance developments that impact trustees and members across the superannuation industry. The first of these is the Financial Accountability Regime, or FAR, which began in March 2025, which strengthens how trustees, directors, and senior executives are held responsible for their actions. It sets clear standards for governance and conduct so that your fund is managed with strong oversight and transparency. This helps ensure that decisions are made with care and always with members' interests in mind. Another new prudential standard called CPS 230 began in July 2025. It focuses on improving how funds manage operational risk and maintain strong business operations. It also strengthens how we manage third-party service providers, helping to keep services reliable and your information safe. This helps your fund continue to operate effectively and protect your information and savings even when challenges occur. I'd now like to provide an update on the licence conditions imposed by APRA. On the 18th of December 2025, APRA imposed licence conditions on ETSL's registered superannuation entity licence, and the full media release of the details is available on APRA's website. Importantly, the changes to the licence conditions will not impact member services. However, it will impact new investment options offered on the platform. Whilst we are working to meet these new licence conditions, there will be an initial delay for the approval of new investment options on the platform over the next few months. We are, of course, supportive of anything that aims to protect member interests and any initiatives to strengthen governance frameworks across the industry. For our part, ETSL has already been undertaking a planned uplift in investment governance, which aligns with APRA's new requirements. I'd now like to move to the regulatory changes which occurred over the year, beginning with the key rates and thresholds that define our superannuation system. From the 1st of July 2025, the superannuation guarantee reached 12%, completing the final scheduled step of the program that began several years ago. This means for salary and wages paid from the 1st of July 2025, employers are required to contribute 12% of ordinary time earnings to super. At the same time, the concessional contributions cap remains at $30,000 and the non-concessional cap is $120,000. The bring forward limit is $360,000 on eligibility. The general transfer balance cap also increased to $2 million on the 1st of July 2025. For members starting their first retirement income stream after that date, the personal cap is $2 million. For members already receiving an income stream, proportional indexation applies based on how much of the previous cap has already been used. While we don't expect to see super guarantee increase in the coming years, the other figures that I've mentioned are adjusted annually to ensure that superannuation limits stay in step with inflation. Further, all these measures contribute to the purpose of superannuation, which was enshrined in legislation in November 2024 to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way. One of the most positive social developments in recent years is the introduction of superannuation on government-funded paid parental leave. As of the 1st of July 2025, eligible parents will receive a 12% super contribution paid into their nominated fund. The Australian Tax Office will pay these contributions as a lump sum after the end of the financial year in which the leave was taken. This initiative helps to close the gap in super balances between men and women and supports parents who take time away from work to raise their families. Now turning to tax savings for very large balances, the government's original plan was to introduce a 30% tax on earnings associated with balances above $3 million from the 1st of July 2025. However, in October 2025, the government announced changes to that approach. The revised proposal would apply to realised earnings only, rather than unrealised gains, and would introduce a tiered rate of 30% for the portion of balances between $3 and $10 million and 40% for balances above $10 million. It is proposed that these thresholds will be indexed, and the new proposed start date is now the 1st of July 2026. The measure has not yet been legislated and will keep members informed once the law is finalised. Another area of focus this year has been payday super. Currently, most employers pay super contributions quarterly, meaning that employees potentially miss out on super returns in the period between payday and the end of the quarter. Payday super will require employers to contribute to super every pay cycle, with contributions expected to reach funds within just a few days of payday. Legislation was passed in November 2025, and the commencement date is the 1st of July 2026. The ATO has published implementation guidance to help employers and funds prepare. These reforms aim to reduce unpaid super and give employees faster visibility of their contributions. As we look beyond these key figures, another focus is on helping members move smoothly into retirement. The Retirement Income Covenant, which came into effect in 2022, continues to inform the way trustees support members in retirement. Each fund must maintain clear strategy to help members balance income, risk, and flexibility in retirement. Our fund continues to refine its retirement income strategy and expand the tools, resources, and advice pathways that help members plan with confidence. In addition to the Retirement Income Covenant, the government's other key area of focus is service standards, after it came to light that a number of super funds were not meeting community expectations around timeliness of death benefit and insurance claims. As a result, the government has announced that it will introduce mandatory service standards for APRA-regulated super funds. These standards will set clear expectations around how funds handle key member services, particularly the timely and compassionate processing of death benefits, the fair and efficient handling of insurance claims, and the delivery of clear, respectful, and accessible communication to members and their families. While it may take a number of years before these standards become law, the expectation is clear. Superannuation is more than just an investment vehicle, and members should be able to expect quality service from their fund. At a system level, cybersecurity continues to be a key area of focus across the superannuation sector. Super funds hold sensitive personal and financial information, which makes them a very attractive target for cybercrime. Across the industry, trustees are expected to maintain strong governance, controls, and incident response arrangements to protect member data and assets. Regulators such as APRA and ASIC continue to emphasise the importance of cyber resilience, including system security, third-party risk management, and clear communication with members if incidents occur. Members also play an important role in protecting their own information by using secure passwords and remaining alert to scams and impersonation attempts. Alongside cybersecurity, artificial intelligence is increasingly being discussed across the financial services industry, including superannuation. At an industry level, AI is generally viewed as a tool that can assist with data analysis, operational efficiency, and member communications when it's used appropriately and responsibly. Regulators have made it clear that the use of AI does not remove trustee accountability and that decisions affecting members must remain fair, explainable, and compliant with the law. As this area continues to evolve, trustees are expected to apply strong governance and risk management to the use of advanced technology. It's also important to recognise the broader picture of consolidation and growth across the industry. As of June 2025, total Australian superannuation assets reached approximately $4.3 trillion, with around $3 trillion held in APRA-regulated funds, such as this fund. The industry continues to merge and consolidate to achieve greater efficiency and scale, which brings benefits for members through reduced costs and improved investment opportunities, while also increasing expectations for governance and service. Before closing, I'd like to remind all members to take time to regularly review your super. Check your balance, your insurance cover, and your investment settings. If you're planning parental leave, make sure your fund details are up to date. And if you have or expect to reach one of the new proposed thresholds in the future, consider how these new tax changes might affect you. For personalised guidance, please contact the fund or seek professional financial advice from a licensed advisor or tax specialist. This year is about building fairness, improving integrity, and lifting service for members. Higher super guarantees, the introduction of super on paid parental leave, and an evolving retirement system are all designed to give you confidence and control. Thank you for joining us today, and I'll now hand over to Steve Davis, Executive General Manager, Business Services from Platform Plus, promoter of the Platform Plus division of the fund, for further information about the fund. Thanks, Steve.
Thanks very much, Catherine. And thank you all for attending this meeting today. If we could jump to the next slide, please. I'll be fairly quick, but a quick overview of focus areas for the year that's gone and the year coming up as well. And really, fundamentally, our focus has always been on significant enhancements to the underpinning administration systems, with a focus on improving the service delivery, improving the timeliness and efficiency and accuracy of how all member transactions and processes are delivered, and we'll certainly continue to work on that as the years progress. Over the last year, we had multiple releases that were focused on enhancing the connectivity between key systems and again, increasing the efficiency and accuracy. We were pleased during the year to see the launch of the iconic Super Wrap division, which is good for all divisions within Wrap Super in that it helps to share some of the fixed costs and allows us to help keep member costs as competitive as possible as we move forward. From a Platform Plus Super Wrap division perspective, the key differential for us, or differentiator for us, is that we also develop financial advisor software, and it's about the integration of that advice software into the super fund that helps advisors provide more efficient and more accurate advice to the members of the fund, and that helps again to keep costs of advice delivery competitive and effective, and improve the accuracy and efficiency of the service delivery. And in addition to the fund, there's non-super options as well. And over the year, we've had solid growth of members' funds, and we look forward to that continuing in the years ahead. In terms of the key service providers, there was really no change for either of the divisions of the fund, and we can't foresee any particular changes coming up in the year ahead as well. If we could jump to the next slide, please. As I've already mentioned, in terms of areas of focus for the year ahead, it really is about continuing to deliver operational and service excellence to the financial advisors who choose to use the fund for their clients and members, and for fund members in general. And we've already delivered really significant improvements and enhancements through multiple releases to the underpinning technology in the period from 30 June to December. Enhanced ability to manage cash, digitization of pension processes and things. And that will continue to be our focus moving forward. And certainly doing so in response to member and advisor feedback to help continue improving operational processes, as well as adding new features and benefits as the years progress. It's been mentioned already, but obviously with changes to how investments are approved and things, it's about working with key partners to ensure that there is a contemporary but trusted investment options available for members of the fund. And we'll continue looking at how we can expand with the right sort of investment options that give advisors and members a lot of flexibility and choice, but in a very safe manner. Obviously, the year ahead has been touched on also. There's a bit of regulatory change, as seems to always be the case with superannuation, and we'll work hard with the administrator and trustee to try and implement those changes with as minimal disruption to financial advisors and members as possible. But with that, that's really all I wanted to touch on today. Thank you again for attending, and I'll hand over to David Warren for a bit more of an update on investment markets and things. Thank you.
Thanks, Steve, for the fund update, and importantly for the achievements and benefits delivered for members in the past year. I'd like to now provide a summary of the trustees' review of the fund and the outcomes achieved for members. Starting with the retirement income covenant, the retirement income covenant continues to guide how funds support members who are moving into retirement. In June 2025, APRA and ASIC collected data on the retirement phase, and they are now encouraging funds to take faster action to make sure members are well supported as they retire. The covenant requires funds to, firstly, help members maximise their expected retirement income so they can have the highest possible income throughout retirement. To also help members manage risks to the sustainability and stability of their income, including the risk of outliving their savings or changes in the market. And lastly, to provide flexible access to members for members' funds so they can choose how and when to use their money during retirement. The introduction of the Retirement Covenant aims to help funds better understand members' retirement needs. It also helps members plan, prepare, and feel more confident about their retirement. As part of meeting this covenant, your fund has published a retirement income strategy, and we encourage all members to read it and to understand how it can support you in preparing for your retirement. Over time, the fund will make available tools, resources, and support to help you identify your retirement needs and know where to find help. And this may include things such as education materials, reminders to review your super at key milestone birthdays, and professional advice for a more detailed plan. Moving on to super returns, before we get into the details of how different markets performed over the past year, it's important to note that you or your financial advisor would have elected how your superannuation is invested in the fund based on your risk profile. The fund offers a comprehensive investment menu with many investment options. This is a general update on investment performance overall for the superannuation industry. I want to take a moment to remind everyone that super is a long-term investment. For most members, it's an investment that can stretch over 40 years or more, from the time contributions begin to when retirement income is drawn. While it's important to look at what has happened in markets over the last financial year, because this is, after all, an annual members meeting, the real focus should always be on the long-term picture. 1 year is just a small part of your total super journey. Over the 2025 financial year, both global and Australian markets delivered strong results despite ongoing economic uncertainty and fluctuating investor sentiment. The year highlighted the importance of resilience, diversification, and a long-term approach to investing. So we then move to looking at an asset class level. Australian shares performed well during the year, returning 13.8%. The result was supported by strength in the resources and energy sectors, which benefited from steady global demand and strong commodity prices. There were periods of volatility early in the year as global growth concerns weighed on sentiment, but confidence improved in the second half, helping to lift overall returns. International shares delivered an impressive 18.6% gain. The United States led global markets, supported by strong corporate earnings in technology and related sectors. Europe experienced more modest results, while emerging markets were mixed due to currency weakness and slower growth in several regions. These differences across markets highlight the value of maintaining a globally diversified portfolio. The Australian listed property sector returned 13.8% for the year. Industrial property remained a key driver of performance, supported by demand from logistics and e-commerce. Retail property also showed improvement, helped by stabilising consumer spending and easing cost pressures. The sector benefited from both yield compression and stronger rental growth. Australian fixed interest returned 6.8% over the year. The environment remained challenging as interest rates stayed high for most of the period. The Reserve Bank of Australia maintained a firm stance to keep inflation under control. Toward the end of the financial year, expectations of future rate cuts helped support bond prices. And lastly, cash investments provided stable and predictable returns of 4.2% for the year, with interest rates at the highest levels in several years. Cash continued to play an important role as a defensive and low volatility asset within diversified portfolios. And the results across asset classes this year remind us that markets move in cycles. Some sectors will lead while others lag, but together they demonstrate the benefit of diversification. A well-constructed portfolio spreads risk and helps investors stay on track through different market conditions. All investments carry some level of risk. It is important to understand your own risk profile and how much fluctuation you are comfortable with. The trustee continues to provide a broad range of investment options, allowing members to choose the level of risk and return potential that best suits your personal circumstances. And then moving on to the investment outlook. The outlook for the market, well, looking ahead, the main forces likely to shape financial markets over the coming year are inflation, interest rates, economic growth expectations, and geopolitical developments. Domestic monetary policy remains in focus. The Reserve Bank of Australia is walking a careful line between supporting economic activity and keeping inflation under control. That said, the global environment is layered with uncertainties, from trade policy frictions, conflict in the Middle East and Eastern Europe, to potential shifts in US domestic and foreign policy, leads to elevated geopolitical risk, which remains a major wildcard. Investment markets generally dislike uncertainty, and this means we should expect periods of increased volatility and the possibility of muted returns. Having considered the broader investment market, we will now turn to member outcomes and how the fund has performed in practice. Each year, we complete a member outcomes assessment to provide transparency on how the fund's products are performing and whether they continue to operate in members' best interests. The last assessment was completed at the end of the 2024 financial year, and we're currently finalising the 2025 financial year outcomes. This includes both Platform Plus Super App and the Iconic divisions. The member outcome assessments consider a broad range of product attributes, including investment risk and return, fees and costs, insurance claims management, member engagement, scale, and an overall product assessment rating. Using a rating scale, the assessments provide the trustees' perspective on how each product compares with similar products in the market. All current assessments are published on the fund's website to ensure transparency and to support members in understanding their superannuation arrangements. The assessment provides also enable the trustee to review areas where performance could be improved and to establish remediation plans where required. In the latest review, the trustee undertook 3 assessments across the Platform Plus Super App division of the fund. Based on the outcomes of these assessments, the trustee considers the products offered through the fund continue to be suitable for members. From the trustee's perspective, these assessments provide an important opportunity to evaluate the sustainability of the fund and the outcomes being achieved for members. For members, the assessments offer relevant information to consider in relation to your savings. That's all we have today from a formal presentation point of view. We'll now move into a question and answer session. This provides an opportunity to address some of the common questions we've received from members, covering topics such as investment markets, risk management, and how the trustee supports members in key areas. We will seek to answer as many as we can now. We'll provide answers to all questions that have been asked in writing, and we'll post them online within 4 weeks of this meeting, together with the minutes of the meeting. Please note that we are unable to answer questions that relate to members' personal account details or circumstances for privacy reasons. Okay, the first question. Does the Shield and First Guardian matters impact our fund? Well, we understand reading about situations like this can create concern, but there is no impact to your fund from these matters, nor the day-to-day operations or the services we provide to you as trustee of the fund. We appreciate this situation has been deeply challenging for those affected. We have clear ideas for regulatory reform, and we are working with the key industry bodies and the regulators. We are respectful of the ongoing regulatory examination of the issues, and we remain deeply committed to supporting them to have robust confidence in the superannuation system. And the ETSL board is committed to acting in the members' best financial interests and takes its compliance obligations very seriously. Okay, next question. What is the trustee's view on the investment market outlook given growing global uncertainty? So, look, investment markets continue to operate in an environment influenced by economic uncertainty, inflation and interest rate changes, geopolitical tensions, and ongoing technological change. These factors can contribute to periods of heightened volatility and short-term fluctuations in asset prices. The trustee acknowledges that uncertainty is a normal feature of investment markets and that outcomes cannot be predicted with certainty. Superannuation is typically a long-term investment spanning decades. While short-term market movements can affect account balances from time to time, the trustee's approach is designed to support members' long-term retirement outcomes rather than react to day-to-day market conditions. This involves offering a range of investment options with different risk and return characteristics and maintaining diversified portfolios across asset classes, regions, and sectors. Again, members are encouraged to consider their individual circumstances and to seek professional financial advice if unsure. Okay, next question. How does a trustee view speculative investments, for example, gold, silver, and emerging technologies such as AI, and what steps does the trustee take to manage and limit exposure to these types of investments? Very topical. Okay, so the trustee recognises that assets often described as speculative, such as certain commodities or emerging technology-related investments, can play a role within diversified portfolios, but they also carry higher levels of uncertainty and volatility. These investments can be sensitive to market sentiment. valuation changes, and rapid shifts in economic or regulatory conditions. The trustee has limits on the percentage of a portfolio that can be allocated to a single investment or asset class in order to provide some measure of protection. However, true protection comes from a properly constructed and diversified portfolio. Members are encouraged to consider their individual time horizon, risk tolerance, and retirement goals when choosing investment options and to seek professional financial advice. Okay, next question. How is the trustee managing cyber threats and ensuring member data and investments are safe? So the trustee takes the protection of member data and investments very seriously and has implemented a layered approach to managing cybersecurity risks. This includes strong access controls such as multi-factor authentication across member portals to reduce the risk of an unauthorized access. Systems and data are protected through secure technology environments, ongoing monitoring, and controls designed to detect and respond to suspicious activity. Cybersecurity governance is overseen as part of the trustee's broader risk management framework, with controls regularly reviewed to address emerging threats and ensure member data and retirement savings remain secure. That's all the questions that we have for today. We have received a number of questions from members on their personal accounts and circumstances, which will be addressed directly with those members. To those members who have submitted questions, we'd like to thank you, and we hope we've addressed them for you. And I'll now hand back to Catherine to wrap up today's proceedings.
Thank you, David, and thank you for your time and attendance today. We hope that you've found the meeting both useful and informative. As David previously mentioned, a video of this meeting minutes, and written responses to all questions raised, including those that we have not responded to today, will be available on the Fund's website within 4 weeks of this meeting. Thank you, and wishing you a wonderful day. Goodbye.